So first of all, let me give some introduction of the depreciation. So for the depreciation, we have two methods. The first one is straight line method. Another method is called reducing balance method. So you need to, when you do the question, you need to understand which depreciation method they use, because different depreciation method they will have different formula. For example, for straight line method, we use cost minus accumulated depreciation and then multiply with the depreciation rate or divided by the useful life. For reducing balance method, we use cost. Sorry, I made mistake. This is scrap value. Why no one inform me? Scrap value. And for reducing balance method is cost minus accumulated depreciation times percentage or divided by useful life. The difference between this formula, these two formula is straight line method, we use scrap value, but reducing balance method, we use accumulated depreciation. These are the difference. So you need to apply correct formula as per requirement. So if you are using straight line method, your depreciation amount is consistent. What's the meaning of consistent? The amount is same during the period over the useful life. But if you're using reducing balance method, your depreciation will become lesser over the period. So this is over the period also. Reducing balance method, so your depreciation amount will getting lesser and lesser. I think this I have explained in the video, so this is a recap for you, okay, for you to have a revision on the depreciation. So far so good. Class, can follow or not? Yoo-hoo! Yeah, alright. And then what is the nature of depreciation? Depreciation is an what? Expenses of a company. So for expenses, we have to put under income statement. Double entry for depreciation. We debit the depreciation because it's expenses, so we debit and then we credit to accumulated depreciation. Accumulated depreciation is under your non-current asset under SOFP. So what is the meaning of accumulated depreciation? This is aggregate depreciation since date of purchase. Let's say you buy one asset, we assume motor car lah, Let's say your depreciation year 1 is 10,000, year 2 is 10,000 as well, year 3 is 10,000 as well. So you add all the previous depreciation together. This is called accumulated depreciation. So in short, accumulated depreciation will reduce the net value of asset. So under our SOFP, what we treated the accumulated depreciation, we put under asset, but this is negative. So far so good. Class can understand this or not from the video? Can I? How about others? Seems like only Jia and Jeremiah is alive, is still in the class. Apa aggregate. Aggregate means add all together lor. Accumulated. Direct aggregate means add together. Okay, so this is the brief introduction. And then another thing, we have something called net book value, right? So what is the meaning of net book value? Cost minus accumulated depreciation. So this is net book value. It means that the net value of the asset after the accumulated depreciation. Alright, so these are the things that you have to understand, and then this is very important when you do the exercise for property, plant and equipment. And now we are going to do home exercise 5.1 together. So are you ready? Yoo-hoo! Ready or not? Yes, Wow, the percentage of response so slow, so little. Alright, so home exercise 5.1. So for this question, we are required to do the account from 1st January 15 to 2017. It means that we are required to do 3 years account. 15, 16, 17. We are required to do 3 years account. And then these are the account that they want us to prepare. So let's see. Home exercise 5.1. Avenger Alliance is a newly started up company. The principal activity of the company is dealing with delivery service. It means that they are a courier company that help clients to deliver their product. The company started its business on 1st January 2015 with a financial year ended 31st December every year. The following are the transactions in relation to the motor vehicles of the company. So you have 3 years information about the company motor vehicles, and they mention to you the accounting policy on depreciation. The company use straight line method. The useful life of the motor vehicles is 5 years. Depreciation is based on pro rata basis. Pro rata refer to based on the number of months used, right? It based on the numbers of months used in the year. No scrap value of the asset. No scrap value of the asset. So we do one by one. We start from year 2015. So are you ready? Yes, Hey class, follow me, because this chapter is very important to you. This chapter is very important to you because you need this knowledge not only for your FA1, you need to use this for your FA2, and if you go for degree, of course you must understand what is depreciation. If not, you will have many problems in your accounting study. Alright, so let's start. So we start from the first year. First, in year 2015, we start from the first one. 1st January, I purchased motor vehicle A and B by what? Cash. The cost is 40,000 and 60,000 respectively. So the first thing is we have to record this, right? So we go to our ledger. In the motor vehicles account, we debit 1st January. I'll come like this. 1st January. Okay, so we have cash. So we can record this is for motor vehicles A, and then we buy motor vehicle B as well. What is the value for A and B? 40 and 60. Alright, 40 and 60. This is a cash payment, so we need to write cash, but we can indicate what is this for. This is for motor vehicle A, this is for motor vehicle B. And then the credit side is goes to cash account, but for this exercise we are not required to do cash account, so we leave it blank. Okay, we are not required to record the credit. Alright, write down the first one. Alright, can we move on? Yes, alright. So the next event on 1st of April, I purchased motor vehicle C by check. The cost is 50,000. So 1st April, what we need to do, we indicate bank because it's a check payment. This is for motor vehicle C. The value 50,000. So when you buy the asset, you debit the motor vehicles account. I repeat, when you buy the asset, you debit the motor vehicles account. Alright, we move to the next one. This one should be quite simple. Next one. 31st December, I purchased motor vehicle D by using cash. The cost is 80,000. So we need to indicate like this. 31st December. By cash. So we write cash. Motor vehicle D. Value is 80,000. Right? So we have complete the entry for all the motor vehicles. So the next thing we are going to do is we have to calculate what is the depreciation for the year 2015. We have to calculate what is the depreciation for the year 2015. So we have to write down what are the assets we have during the year 2015. We have motor vehicles A, we have motor vehicles B, and motor vehicle C, and motor vehicles D. Okay, we write down the asset we have during the year 2015. And then we have to indicate what is the formula of depreciation. So we look at the question again. They say they are using straight line method, no scrap value. So we know the straight line method formula. Straight line method formula, we use cost minus scrap value and then divided by useful life. So in this situation, they say no scrap value, right? So your scrap value is equals to 0. Meaning that you can use cost divided by useful life straight away because the scrap value is 0. Understand or not, class? If in your question they say that the scrap value is 0 or there's silence on the scrap value, you can assume that the scrap value is 0. So you just use your cost divided by useful life. Okay? Are you clear? Alright, so let's start. So we look at motor vehicle A. Motor vehicle A, the cost is 40,000, right? The cost is 40,000. So we divided by the useful life, which is 5 years. So how many months that we use in a year for motor vehicles A? Can you tell me how many months we use in the year 2015? Yes, we use 12 months, right? Because from 1st of January to 31st December. So you no need adjust the number of months. So you just use 400,000 divided by 5. So answer 400,000 divided by 5. So we get 8,000 as the depreciation for motor vehicles A. Next, we have motor vehicle B, right? The cost of motor vehicle B is 60,000. Useful life is 5 years. And but for motor vehicle B, how many months that we use in a year? Also 12, right? Because same purchase date as motor vehicle A. So answer, we use 60,000 divided by 5. So 12,000. So we write 12,000 here. Next, motor vehicle C. The cost of motor vehicle C is 50,000. We have to divide it to 5 years because this is the useful life. But motor vehicle C, we buy at 1st April. So can you tell me how many months that we use this asset? How many months that we use motor vehicle C in the financial year 2015? 9 months? Okay, let's calculate together. Because this is 1st of April, right? So 1st of April have to consider. So we start from April, May, June, July, August, September, October, November, December. So total, you have 9 months using in the year. So how to adjust the 9 months using in the year? You multiply by 9 divided by 12. So the 9 divided by 12 is used to indicate you have used this asset 9 months in a year. That's why we divided by 12 and multiply by 9. So answer 50,000 divided by 5 divided by 12 times 9. So we get answer 7,500. Guys, can follow or not? Am I too fast to you? Is it too fast for you? Yoo-hoo! Am I too fast? Can follow, huh? Alright. Last one. Motor vehicle D. We know the motor vehicle D, the cost is 80,000. So we divided by 5. So one question, how many months that we use motor vehicle D in the year 2015? How many months that we use? So Jia answer is 0. Ziling answer is 0. 0 me? How about this? How many months? Jia Yu also 0. Xing Jie also 0. Darren, your answer? Hey, where is Nixon? Why no answer? Balance also 0. No other answer, huh? So the number of month is 0. Why 0? Because this asset we purchased on the last day of the year. It means that we are not using this asset. So no depreciation should be calculated. So we multiply with 0. No depreciation. So the answer is 0 as well. So from this working, we can understand that during the year, our depreciation in total is 27,500. Alright, the total depreciation for the year 2015 is 27,500. I repeat again, why 0 for motor vehicle? This because this asset we purchased at the end of the year, that's why no value. Alright, so the next event that we are going to record is we have to record the depreciation of the asset during the year. So this is 2015, 31st December. So in the depreciation account, we debit 27,500. In the accumulated depreciation account, we credit 27,500. Double entry, I repeat again. We debit the depreciation account and credit the accumulated depreciation account. But you cannot write your name, right? So we write the opposite. So this will be accumulated depreciation of motor vehicles. And for this one, we cannot write our own name, right? So we write the opposite, which is depreciation. Right, this is the double entry. This is the double entry. Debit the depreciation account and credit goes to accumulated depreciation account. So if there is no more event, then we have to close the account for financial year 2015. So how we do the closing? For motor vehicles, this is asset, right? So for asset, we use balance CD to close it. So what is the total here? The total value is how much? 230,000. So we write 230,000 here. So we can balance it. CD on the credit, BD on the debit. So we write 230,000 to bring this amount to next year. This is for the motor vehicles account. Next, the next account is depreciation. Depreciation is expenses, right? So for expenses, we have to transfer the amount to income statement. So 27,500 will be transferred to income statement as expenses. And last one is your accumulated depreciation. Accumulated depreciation we also recognize as an asset under SOP. So we have to do the balance CD, transfer the amount to next year. And this amount we will carry forward in next year. So 2016, 1st January, we have a balance BD, 27,500. So that's all we have complete the ledger for 2015. Okay, question time. Do you have any question to ask in the accounting entry for these three accounts? The motor vehicles account, depreciation account, or accumulated depreciation of motor vehicles account? Or you have question in the formula? You can also ask me. Got question or not? No question, huh? Still okay, huh? How about others? Alright, very good. So smart. No question, huh? Alright, so can we move to next year? Year 2016. Should be okay, right? Right. Let me know if you cannot follow. I can explain again on the terms that we use. Alright. Don't worry. No one will be left behind. Okay, we go together. So we come to year 2016. So what happened in year 2016? 31st of March, we written off motor vehicle A due to major accident. So on 1st of April, we purchase E to replace A. Then the cost is 550,000, and on 30th September we spent 12,000 by cash to replace the tire of all the motor vehicles. So we start from the first one, written off motor vehicle A. So we go to our ledger here. So debit side of the asset is increased. So now we written off, right? Written off, we need to indicate in the credit side of the asset. So we write 1st of January. We write asset written off. How much to written off? We follow the value of A. The value of A is 40,000, right? So during the write-off, we also write 40,000. I explain again. Also, sorry, the date should be 31st of March. 31st of March, our motor vehicles accident, right? Has major accident, so we have to write it off. So during the written off situation, we have to credit the motor vehicles account. But what is the value to credit? We base on the value that we spent to purchase the asset. You see 40,000 here and 40,000 here. So we credit the motor vehicles account, and then in the asset written off account, we write motor vehicles for motor vehicles A. Value 40,000. So this is the double entry. We credit the motor vehicle account 40,000, and then in the written off account, we debit. This is the first entry, written off of asset. So next we have to calculate what is the depreciation that we have to reverse from the accumulated depreciation account. Alright, the next. So we indicate this is motor vehicles A. So calculation of depreciation. So for motor vehicles A, the cost is 40,000. The useful life is 5 years. But the question is, how many months that we use A in the year 2016? 3 months, January, February, and March. So it's 3 months, right? So times 3 divided by 12. So this is to reflect we only use 3 months. So calculator. So we get the answer of 2000. So 2000 will be the depreciation of motor vehicle A up to the date is written off. Alright, because we have used 3 months of motor vehicle A in the year 2016. So we only charge depreciation for 3 months, which is 2000. So the next step that we are going to do is to reverse all the accumulated depreciation for motor vehicle A. So during the reversal, we write 2016. This is 31st of March. So we also write asset written off. This is motor vehicle A. So how much to reverse? Motor vehicle A, the depreciation in the year 2015 is 8,000. Depreciation in 2016 is 2,000. So in total is 8,000 plus 2,000. So we have to reverse 10,000. Alright, we have to reverse 10,000. Because the asset is not longer in the company, so we have to fully reverse the accumulated depreciation of the written off asset, which is 10,000. So we debit the accumulated depreciation of motor vehicles account, and credit goes to written off account. $10,000. Alright, this is the entry. So, any questions so far on the written off? Hello, question on written off? No question, huh? How about others? If not clear, please let me know, then I can repeat again. So Puchi also okay? Jeremy okay or not? Darian okay or not? Nixon today not coming, huh? Why no someone? Venus okay or not? Yoo-hoo! Give me some response. No question, huh? Why use accumulated depreciation account? You mean which one? This one, ah? Are you refer to this one? Alright. Darren, we look at the situation, 31st of March, this asset is we are going to write it off, right? Because cannot be used during the major accident. So meaning that this asset is not longer in the company. That's why we have to find in our motor vehicles account and accumulated depreciation account. We have to reverse all the amount belongs to motor vehicle A. So under the cost motor vehicle account, first we reverse the value of 40,000. Alright, first we reverse the 40,000. I think you can understand this, right? We reverse because this asset is not longer in the company. Am I right? This one you can understand or not? Yes, huh? Alright. Next, accumulated depreciation. What is accumulated depreciation? It means that all the depreciation for the company asset. Why we say all? Because if the company used for few years, we have many years depreciation, right? So accumulated depreciation refer to the all depreciation since the first day of purchase. Imagine motor vehicle A is not longer in the company. Do we need to reverse our accumulated depreciation? Because A is not longer in the company, we should not keep any accumulated depreciation in the account. That's why we make the reversal. We find what is the total of 8,000 in the year 2015 and 2,000 in the year 2016. And then we do the adjustment. We reverse the accumulated depreciation out. Because A is not longer in the company. So far so good. Good, eh? Because no longer in the company, so we have to find out what is the total accumulated depreciation and make the necessary reversal. Okay, eh? Can we continue? How about others? And listen, today not coming, huh? Siqi, got question or not? Huh? Xin Jie leh, okay ma? Okay, eh? So I repeat again, no one will be left behind. So got question, please ask me, and we can discuss together. No worries, huh? Don't feel shy, huh? Right. So we have recorded the events for 31st of March. So we look at the next event. The next event say that I purchase motor vehicle E by using cash to replace motor vehicle A. The cost is 55,000. So for the purchase, 1st April, we write on the debit. So we write cash motor vehicle E. What is the value? 55,000. Next, I spend 12,000 by cash to replace the tire of all the motor vehicles. So tell me, this 12,000, we have few account here, right? Which account to record this 12,000? Can we write in the motor vehicles account 12,000 here? Why? Why cannot? Yes, the 12,000 we cannot write in the motor vehicles. You see, this 12,000 we spend to what? Replace all the tires. So tires considers as wear and tear. It means that these things will be replaceable. We will keep changing of our tire. So this is our repair and maintenance. So repair and maintenance is under expenses. So we go to our repair and maintenance account 2016, 30th of September, we write cash 12,000. Remember, those we spend on the repairing or changing of the parts in your motor vehicles we consider as repair and maintenance. Repair and maintenance is under expenses. Do not write this 12,000 as your company asset. Alright, so far so good. So if no question, we are going to calculate the depreciation. So this year, instead of motor vehicle A, we have motor vehicle B, C, D, and also motor vehicles E. So B, 60,000 divided by 5. This is the cost, this is the useful life. And then do I need to adjust the numbers or what? Or you can tell me how many months that I'm going to use in this asset in this year. How many months? 12 months, huh? You see, B we purchased in year 2015. B we purchased in year 2015. And in year 2016, we did not sell it. When you did not sell the asset, it means that you are carrying on, or you are still using the asset. That's why the number of months of using this asset is 12. So we no need to adjust the number of months. All right. So 12,000. So for C, the cost is 50,000. The useful life is 5 years. So do I need to adjust the number of months? Do I need to adjust the numbers of months? Hello, do I need to adjust the number of months here for C? No need, because C, although we purchased on 1st April last year, but this asset is not selling in the year 2016, meaning that this asset is continuing using. That's why no need to adjust the number of months. So answer 10,000. For D, the cost is 80,000. The useful life is 5 years as well. And what is the number of months that we use the asset? D. 12, because this asset we purchased in year 2015 and we did not sell or written off of this asset in year 2016, meaning that we are continuing using. Alright, meaning we are continuing using. So no need to adjust the number of months. So we use 80,000 divided by 5, 16,000. How about motor vehicle E? The cost is 55,000 here. So we divide 5 years. And how many months that we use this asset? This asset we purchased on 1st April. Motor vehicles E. 9 months, very good. Alright, 9 months. So times 9 divided by 12. So let's see, 55,000 divided by 5 times 9 divided by 12. So answer 8250. So from here we can understand that the total depreciation in the year 2016 is 48250. Why 9 years? Sorry, why 9 months? You see, when we buy the asset, April. So April, we start from April and then May, June, July, August, September, October, November, and December. So how many months here? You see this 9 months. Because the asset we purchased on the first day of the month. So we start from April. April to December, 9 months. Fairness, okay or not? Alright, so when you have the difficulty in calculating the number of months, don't feel shy. Use your fingers, because your fingers will not cheat you. You can use your fingers to calculate how many months. Alright, so 9 months here. Alright, so we have to record this depreciation. So similarly, in the year 2016, we are debiting the depreciation account 48250, and then we credit to accumulated depreciation account. So this is the double entry. For depreciation, we always use the last day of the year. For depreciation, we always use the last day of the year. So can we proceed the closing of the ledger? Can I? So for motor vehicles account, the debit total is 285. So in order to do the closing, 245 here. Alright, so the date we write 31st December and balance CD. Right, 245. And then this amount we will carry to next year. 245. Later on, I will help you to check. I will help you to check whether this balance CD is correct or not. Alright, so we do the closing first. So at the end of the year 2016, the total motor vehicles we have is 245. And how we prove the 245? I teach you. So first of all, we identified the assets still in the company. A already written off, right? So we still have B, C, D, and E in the year of 2016. Am I right? I repeat, in the year 2016, we still have B, C, D, and E. The value of B is 60,000, 50,000 for C, 80,000 for D, and 55,000 for E. So what is the total here? 245. It means that your balance CD amount is correct, 245. Alright. This one you are not required to show me in the exam, but this is help you to check your answer to see whether your balance CD amount is correct for the respecting year. This is just a working for you to check whether your answer is correct for the respective year. Can or cannot? Alright, this is only for checking. So for depreciation account, similarly, we transfer this amount to income statement. 48250. And how to prove this answer? This answer is follow your working here, 48250. Right? And next, accumulated depreciation. So the total credit is 75750. And on the debit side, we have 10,000 only. So what is the balancing amount? 65750. So what the wording we use is balance CD. And this amount we will bring to next year. 65750. And then moving on. Okay, I teach you how to check the accumulated depreciation first. So based on the ledger, it say that at the end of 2016, 31st December, our total accumulated depreciation is 65,750. So actually we can have a check to see whether our answer is correct or not. So let's have a look. So what is accumulated depreciation? Accumulated depreciation means the depreciation for the asset since the date of purchase. It means that this amount is accumulated depreciation, part of the accumulated depreciation. This one as well, this one as well, this one and this one, also the accumulated depreciation. Why I cannot include A? Why I cannot include A? Because A has been written off. Remember, we have made the reversal of 10,000. It means that there is no more accumulated depreciation for motor vehicle A in the company account. So let's do a sum up for those highlighted amount to see whether the answer is correct or not. So 2016. So we use this one and this one, this one and this one. You see, the total highlighted amount, which is the asset in the company, still in the company, is 65,750. This is the total accumulated depreciation. And this amount, if you can match with the balance CD here, meaning that your accumulated depreciation account is correct. Alright, this is a method for you to check your answer. I repeat, this is a method for you to check your answer. This is a working, you no need to present in the exam. So in the exam or during your assignment, if you have additional time, you can doing the checking. Clear? Clear or not, class? Are you clear with what I explained just now? Clear? This is just a working for you to check your answer. So we continue. We still have other account need to close. Written off account. Asset written off account is an expenses. So we have to bring this amount to income statement. The balancing amount is 30,000 here. And for the repair and maintenance, this is also expenses of the company. So we bring this amount to income statement, 12,000. Alright, that's all for 2016 ledger. Let's have a look. So class, done? Have you completed the 2016 transaction? Yeah. Which part you want me to further explain in your 216? Yoo-hoo! Hey class, got question to ask or not? No, So can we proceed? Can we proceed to 2017? Clear? Let's go. Alright, very good. So let's have a look on what happened in 2017. So first one, year 2017, 1st of February, I dispose. What is the meaning of dispose? Sale. I sell motor vehicle B with a selling price of 23,000. The amount is collected by check. So we go to our Motor vehicles account. So 2017, 1st of February. So we have a disposal. This disposal is for B, right? So what is the cost of B? The cost of B is 60,000, right? So we write 60,000 here. When you dispose the asset, you credit the asset account. So credit the asset account, debit goes to disposal account. So 2017, 1st of February. Sorry, 1st of February. Yeah, 1st of February. So we have motor vehicles B 60,000. Yes, 60,000 here. So the first step is to reverse the asset, transfer the asset to disposal account. Next, the next step is to calculate what is the total accumulated depreciation for B. Right? The next step is to calculate what is the total accumulated depreciation for B. So before that, we have to figure out, are we using motor vehicle B in the year 2017? So B, the cost is 60,000. Useful life is 5 years. When we dispose the asset, we dispose the asset on 1st of February. So meaning that we are using in the year of 2017, right? So tell me how many months that we use this asset? How many months that we use this asset in the year 2017? How about others? Any other answer? Jaja, how many months? Jeremiah, how many months? Got one answer only, meh? Siqi also think is one. How about others? Venus, how many months? Junbyo, are you here? Junbyo, how many months? 1 month, Alright. You see, this asset disposed in the first day of February. It means that February we cannot consider as using. So we can only consider January. January is the 1 month of using of this asset. So times 1 divided by 12. So answer 1,000. Let's check. 60,000 divided by 5 divided by 12. Yes, 1,000. So meaning that motor vehicle B, we use 1,000. The value of depreciation is 1,000 in the year 2017. Alright. So the next step we are going to do is do the reversal. So we have to reverse from the accumulated depreciation account. So we write 2017, 1st of February. We write disposal. This disposal is motor vehicle B. But one question, how much to reverse? How much to reverse from the accumulated depreciation account? So I show you the working here. Can you give me the answer? Yes, how much of the accumulated depreciation we should reverse? Have a guess how much of the accumulated depreciation we have to reverse when we dispose B? So Darren answer is 25,000. How about others? Chris, 25,000 as well. How about others? Chắc chưa? Your answer đấy. Jeremiah, your answer đấy. Venus, answer. Try lah. No need to scared. No answer. Only two provide answer. Huh? Alright. You see, B, the 2015 depreciation is 12,000, right? And then in year 2016 is another 12,000. In 2017 is 1,000. So 12 plus 12 plus 1 equals to how much? Total here, 25,000. Alright, so during the disposal here, we have to write 25,000 because this is the accumulated depreciation, total accumulated depreciation for B since the first day of purchase. Alright, so we write disposal B 25,000. This is the debit, and then for the credit, we goes to disposal account. We write accumulated depreciation of motor vehicles, and this is for B 25,000. Next, we have to record how much we receive from the disposal of this asset. So we look at the question. So the question saying that we receive 23,000 by check, right? So in your disposal account, at the credit side, you will write 23,000. And what is the description for this 23,000? Bank. Hey, how come like this? Huh? Wait a second. Right. So we receive 23,000 from the selling of this asset. So let's do a comparison. The cost of this asset is 60,000. The accumulated depreciation that you use up to date is 25,000. You receive 23,000 from the selling. So for this question, the balancing amount is appear at which direction? Appear at debit or credit? Plus, the balancing amount appear at the debit or credit? Credit, because you see debit is 60,000, credit is 48,000, right? Meaning that we have a balancing amount 12,000 here. We have a balancing amount 12,000 here. So what is this? This is gain on disposal or loss on disposal? Loss. Why loss? We can use a logic to explain this. When I purchase B, I spend 60,000. When I purchase B, I spend 60,000. And then this asset, the depreciation during the year up to the accumulated depreciation from day one up to the date of disposal is 25,000. This 25,000, we can say that this is the benefit that we use from the use of this asset. This is the benefit from the use of this asset is 25,000. And then I receive another 23,000 from the selling of asset. It means that the total recovery is only 48. Cost is 60,000. Recovery is 48,000, meaning that we suffer a loss of 12,000. And this loss on disposal, we will record in the loss on disposal account. What we write disposal account, and we can specify this is for B. For the disposal account, we do one by one. When you sell one asset, we close one account to find out what is the gain or loss. So question, do you have class, do you have question on the disposal and you wish me to explain again? Yoo-hoo, class. Which part you if gain means out? Okay. So for this exercise, we show a loss on disposal, right? So can I change some situation? Let's say the collection we assume is 43,000. The collection is 43,000. So let me explain again. This asset, when we purchase, we spend 60,000. And then on the credit side, it say that the benefit of using this asset is 25,000. And during my selling of this asset, I get 43,000. It means that the total amount that I collect or the total benefit that I use for this asset B is 68,000. So 68 is higher than 60, right? So the 8,000 will appear on the debit side. So this is gain on disposal. No, this is just an example. If this is a gain situation, the original amount is 23. I just want to explain in another situation, for example, gain on disposal. What is the accounting entry? The original amount is 23. Alright, this is additional example. Alright, let's say we reverse back. Yeah, this is the original entry. Because Phoenicia wish to see how the disposal account looks like during the gain on disposal. That's why I illustrated another example. Okay? Can follow? Disposal account consider what? Why receive selling price is credit? A very good question, Darren. Alright. So in a simple way, what is a simple definition? What is disposal account? We can say that disposal account is a temporary account for us to find out what is the gain or loss from the disposal. this is just a temporary account for us to find out what is the gain or loss on disposal. That's why we must get the amount tallied for each buying or for each disposal. All right, so this is the explanation for what is disposal account and why receive money is on the credit. When we receive money from a buyer, right, when they buy the asset, they give us money. So when we receive money, we debit what account? We debit bank account. And then we credit goes to disposal account. If gain, record which side in gain or loss on disposal. All right. So I reverse back to the situation. Let's say this is a gain on disposal, right? So I debit the disposal account. So 2017, 1st of February, I will write disposal here. This is the situation where I make a gain. Make sense? This is the situation when we make a gain on disposal. Okay, all right, any other question? Any other question on the disposal? Yoo-hoo! If no question, then I continue. Can or cannot? Can give our C. Okay, because we still have few transaction on it, 2 more transaction. After that, I will give you a break. Which don't worry. After this question, I will give you a break. All right, so we can continue, right? Is it okay to continue? Continue, All right. Let's see. 1st July. 1st July saying that I trade in motor vehicle C and purchase motor vehicle F. So the trade-in value of motor vehicle C is 30,000 and the cost of motor vehicle F is 70,000. The balance is paid by cash. So in a simple way, 1st July, we sell C and buy F. So we go to our ledger. Ledger. Okay. So 1st of July, we dispose what motor vehicles? We dispose C. What is the value of C? Here, 50,000. So we credit 50,000. This is the first step. When we dispose the asset, we credit the asset account. And then in the disposal account, 2017, 1st of July, we write motor vehicles C, 50,000. This is the double entry. I show you again. We credit the motor vehicles account 50,000. And then debit the disposal account 50,000. All right, are you okay with the first 30? No, 50. C, right? The cost of C is 50,000. You see? So when we doing the reversal, we also reverse 50. Perhaps you look at the wrong amount. It's 50. You means the 30,000 here, right? The trade-in value is 30. It's not saying that the cost of C is 30. It means that now we are going to sell our C, right? People give a value to C. The value of C is 30,000. But in the accounting, when we do the reversal, we should reverse the cost of the asset. Okay? The cost of the asset here. Jingling, okay or not? Okay, huh? Right. So similarly, we also need to calculate the depreciation for C. Why? Because the disposal is happened in 1st of July, right? It means that we use certain months of these motor vehicles in the year of 2017. So tell me, how many months that we use C in our year 2017? 6? How about this? Alright, the answer is 6. Why 6? Because from 1st of July, right, up to December is 6 months. July, August, September, October, November, December. Use your finger. Don't feel shy. Alright, you can get the answer of 6. So answer here, 5,000. Alright, 15,000 divided by 5 times 6 divided by 12. You get 5,000. So next, we have to reverse the disposed asset. So we go to accumulated depreciation account. On 1st of July, we dispose C. So tell me, what are the total accumulated depreciation that I have to reverse? What is the total accumulated depreciation I have to reverse when I dispose C? Tell me answer. So Wei Qian answer is 22,500. Jia Jia also the same. How about this? Darren also the same. How about this? Try to participate. Oisia also 22,500. How about this? Any other answer? Woohoo! No, okay. The correct answer is 22,500. Why? You see, C we use in year 2015, the depreciation is 7,500. C we use in 2016, right? The depreciation is 10,000. C we also use in 2017, the depreciation is 5,000. It means that the total accumulated depreciation for C is how much? 22,500. You can see the sum amount here. Okay, 22,500. So this is the correct answer, 22,500. Alright. So we write 22,500 here. So we debit the accumulated depreciation account and credit goes to disposal account. Alright. Can follow? Am I too fast? Hopefully not. Alright. Can we continue? So during the disposal, we can receive money from the buyer because we sell the asset. We sell the asset, we call disposal. But for this situation, a bit different. They say that I did not spend money, I did not get any money from selling the seed. Why? I trade in. What is the trade-in value? 30,000. I repeat, for this asset, right, we are trade-in, and the trade-in value is 30,000. So what is trade-in? I use an example for you. So this normally happen when you have car. Right? Let's say this is your car, this is your old car, and then you want to buy a new car. So can you understand this is car? I have tried my best to draw. I hope you like it. If you want, I can draw for you. So let's say today you want to buy a new car and you go to find the car dealer. Car dealer say that okay, the new car value is 100,000, and for your old car, I think the value is only 10,000. So now you want to change, right? You want to change from an old car to new car. So you also want to sell this old car because you think that you no need to have two cars. So you sell your car and the value is 10,000. So when you buy this new car, can you tell me how much you need to pay? How much of money that you need to pay? Let's say this amount, this old car you want to give to, you want to sell to the car dealer. How about others? Darren and Weiqi answer is 90,000. Oisha also 90,000. Jia Yi also 90,000. Jia Jia also 90,000. So the correct answer 90,000. Why 90,000? You see, the new car value is 100,000 and the old car you want to sell to the supplier. So this arrangement we call what? Trade-in. This is trade-in arrangement. It means that the 10,000 you did not get any money, but this 10,000 you will use to what? Offset the payment. This 10,000 you will use to offset the payment. So in fact, you only need to pay 90,000. What is this arrangement? This arrangement called trade-in. Understand or not, class? Okay or not? My explanation. Which part is not clear? Okay, huh? Alright. So can we continue to our question? We back to our question. So the question say that the trade-in value for C is 30,000 and this trade-in is for which motor vehicles? This is for motor vehicles F. It means that I sell C at the same time I buy F, and this is under trade-in arrangement. So when you have a trade-in in our ledger, in the credit side, we are not writing bank anymore because we did not receive any money, but we write motor vehicles account. And this trade-in is for F. The trade-in value 30,000. So we credit the disposal account, and then in the motor vehicles account, 1st of July, we write disposal, and this is for F under trade-in situation, 30,000. Can you understand or not? I repeat, in this arrangement, the credit side is no more bank because we did not receive any money. This trade-in value 30,000 will be used to offset the cost of F. That's why we credit the disposal account and then we debit to the motor vehicles account. It means that this 30,000 will be the part of cost for your F. Clear? Clear? The 30,000 will be used as part of the cost for your F. How about others? Okay or not? Are you good? Are you good with this? Jeremiah, okay, ma? Venus, okay? Give you some response. No, say no. Don't know, say don't know. Okay, Alright, good. So we have done this, So we complete the disposal account first. Still can, Okay, good. You see, these motor vehicles, we spend 50,000 to buy these motor vehicles. And then the benefit of using is 22,500 and the trade-in value is 30,000. So tell me, what is the balancing amount? Our total credit is 52,500 and the total debit is 50,000. So from this balancing amount, we have a 2,500, right? Yes, we change, you're right, 2,500 here. So what is this 2,500? What is this 2,500? Yes, very good. This is gain on disposal because the benefit or the amount that we receive is more than the cost. So this amount will transfer to here. So this is disposal for C, 2,500. Alright, hope you can follow. The cost is 50. The benefit we use or the value and the value we collect is 52,500. So we make a gain on disposal. Follow, But we not yet complete our motor vehicles account. We go back to the to our motor vehicles account. So it means that for the motor vehicles F, right, part of the value will be done in trade-in, and the trade-in value is 30,000. So I want to ask you something. Based on this situation, they say the cost of motor vehicle F is 70,000. The balance is paid by cash. So how much I need to record in the motor vehicles account for the F? Any other answer? Why not 70,000? 40. Jia Yu also say 40. Siqi, what is your answer? Jia, what is your answer? Also 40. Venus, what is your answer? Jeremiah, what is your answer? 40,000, Alright, yes. The balancing we pay by cash, right? 40,000. So total for F will equals to, total of F will equals to 70,000. Imagine you write wrongly. You write 70,000 here. The total amount become how much? 100. It means that your answer is wrong. Because during the trade-in situation, you are only required to pay the balance amount, which is 40,000. Can follow, So we pay cash 40,000 for F, the balancing amount. So let's move on. And last one is upkeep and maintenance of all the motor vehicles. The cost of repair and maintenance is 14,000. This one very simple, repair and maintenance account. So 31st December in our repair and maintenance account, 2017. Cash, 31st December, we have a cash, how much? 14,000. Alright, so we have finished the recording and now we have to do the depreciation. So A disposed in year 2016, so no more depreciation in set 17, and B and C we have calculated. So we still have D, E, and also the new member F. For D, I think the depreciation will be the same. For E, because this asset we purchased since year 2016 and we still using in the year 2017, so we charge full year depreciation. And how about F? The cost of F is 70,000, useful life 5 years, and how many months? This asset purchased on 1st of July. How many months we need to adjust? Yoo-hoo! 6, huh? Yes, from July up to your December is 6 months. So 80,000. This one we use here lah. 80,000 divided by 5. So this is 16,000. 55,000 divided by 5. This is 11,000. And then 70,000 divided by 5 times 6 divided by 12, 7,000. So the total depreciation for year 2017 is 40,000. Alright, let's record this in our ledger. So 2017, the depreciation is 40,000. We debit the depreciation account and then we credit to the accumulated depreciation account 40,000. So basically we have complete all the entry, and now what we need to do? We need to do the closing of ledger. So are you ready for the last step in our exercise 5.1? Are you ready? Can we continue? Yoo-hoo! Okay. So if you're not ready, let me know so we can wait. Okay, alright. So now we do the closing. So total debit for your motor vehicles is 315. Credit is 110. The balancing amount 205. Right, this is balance CD. So this amount will bring to next year. Sorry. 205. And now we do a testing for 2017. So 2017, what are the assets we have? We still have D, we still have E. At the same time, we buy F. The value of F is 70,000. So from here you can see that yes, our motor vehicles account, the answer is correct, 70,000. Sorry, 205,000. At 2017, we have selling our B and C. So the remaining is D, E, and F. So the total cost for D, E, and F is 205. If your ledger can match to your checking, meaning that your answer is correct. So we have done the motor vehicles account. For depreciation account, very straightforward. We check with our working here, 40,000. Alright. For depreciation, very straightforward. And for the accumulated depreciation account, the total credit 105,750. The total debit is 47,500. So what is the balancing amount? 58250. 58250. So this is balance CD. And the balance PD, we are going to record in next financial year. 58250. Similarly, we can have a checking for your total accumulated depreciation for the year 2017. So how we do the checking? We go back to our table here, the depreciation. So at the end of the year, DE and DEF are still the asset in the company. So we add those highlighted amount $58250. Because A, B, and C already disposed, so we have reversed out. So in our accumulated depreciation account, we only left 58250. If you can match your answer here, it means that your answer is correct. So this is just a checking. And continue. Disposal account. So here we need to close. So the balancing amount is here, 31st December. So 9,500. So this amount we transfer to income statement. Meaning that at the end of the year, the net disposal is on the loss. Because if your income statement is shown on the credit, it means that this is an expenses account, 9,500. You see, loss is 12, gain is 2,005, balancing is now 9,005, which is a loss on disposal. And lastly, your repair and maintenance account. Close. Repair and maintenance is your expenses, so we transfer to income statement.